Future. Hi, and welcome to Las Vegas for the 2016 edition of the Recon Conference. I'm here with a new friend, Janice Sellis from Transwestern. Janice, good to see you.
Good to meet you.
Thanks for coming by. Actually, we came by because this is your booth.
Happy you're here.
Talk to me about what you're seeing. We've tracked over the years about how investors are going to secondary markets for guaranteed yields, office investors, even if those yields are a little bit lower. You're seeing retail investors going to secondary markets for guaranteed yields that are higher. What's the dichotomy there? And talk to me about that.
Well, I always hesitate to use the word guaranteed in real estate because nothing's guaranteed, right?
Really?
But we do see slightly higher yields in some secondary and tertiary markets.
Right.
And I focus on the Midwest. So, using the Midwest as an example, a grocery-anchored center that might sell for, say, a 6 cap in Chicago would sell for maybe 6.5 to 7 in a smaller market. There's less competition from the buyers for those types of assets.
Which is always part of the attraction.
Yes. In the larger cities, there tends to, if it's a nice, well-located asset, there tends to be a bidding war and more competition on the buy side. But in the smaller markets, there's a little less competition.
Sure.
So less competition, and they get a slightly higher yield for their return. But there's risks that go along with that because the smaller towns might not have as strong of an economy, not as great of economic drivers that you would have in, say, Chicago.
Are the yields farther out?
In terms of
time frames and wait times?
No, I think it's similar, yeah. It depends on the property, though,
Okay, because that kind of blows my whole perception of that secondary primary market dichotomy because of everything that we've heard of what exists in the office market. You're also seeing a trend toward discount retailers again?
Yes.
Even at the peak of the market?
Yes, they seem to be the ones that are having the growth. Nordstrom Rack is a great example. Their sales are surging while sales at the traditional inline Nordstrom are slipping a little bit. Buyers like to bargain hunt. They like to find good deals. And the discount retailers have really upped their game. I mean, when you go to Nordstrom Rack, it's a nice shopping experience. Even TJ Maxx has really redefined themselves over the years. I mean, they've been around forever, but in the last 10 years or so, they've really become a great discounter. They have more high-end products at their stores. The home goods line has been tremendously successful for them. So that's where all the growth is. And you take someone like TJ Maxx, that's been their main line of business for years, but all the more traditional retailers are also coming out with these discount chains.
Interesting, yeah.
Nordstrom Rack being an example. Saks off Fifth. Macy's has one. Kohl's has one, and that's where the growth is.
And power centers.
And power centers, yes. Yes.
Terrific.
Yes.
Thank you so much for your time.
Thank you.
It was a pleasure.
Thank you. I appreciate it.
Thank you, and I want to thank you for joining us on Globe Street TV.